Hey, good morning, traders. How are you today? Hope you're doing well. So let's go over my trades for the day. I'm two trades, two green, and that's how it is. So let's take a look at what happened this morning. So I went into this morning generally with a bullish bias, and I'll tell you why. I mean, just look at the daily chart on SPY, and you'll kind of get an idea as to why. But generally, we're touching our monthly pivots here. If you look at the monthly chart on the SPY, you can see that our monthly high or low is right around there, 284-ish, 285, 82, pretty much. So we're watching for any kind of bounce to take place. So, not swinging. We're talking day trades here only. So again, watching for the morning price action to see if we're kind of get a move lower and then any kind of failure. So basically what we got was exactly that, where we moved down, came pretty close to this monthly pivot here, and then we just sort of changed the short-term trend. Now I'll show you where I entered on the SPY here. We'll go in my trades, and you can see I keep moving myself from left to right anyways. You can see here the first entry was made at 10:11 on the SPY, where basically I sold the 286 puts and bought the 285 put to create a spread. Options are very expensive because the VIX is high. So that's what we're trying to profit off of. So at 10:11 a.m., that was pretty much right here. So we saw a pop right off the lows of 285.55 and then a consolidation for about 5 minutes straight. Now, during this consolidation, that's when I opened the trade. And I was looking to limit into that trade to see what kind of spreads were available. Generally, I spent the majority part of the morning trying to find options that didn't have spreads that were like 50 cents or more wide, because pretty much everything was through the roof in that regard. So I just waited patiently for the trade to come to me. And once I saw those options, those spreads tighten up a little bit, is when I decided to put on the trade. And as you can see, we moved higher, then came back down to test the low. So I said at this point right here, I was getting tight with my trade. I was going to say, look, I'm not playing around here, because there was a big selling going on the tape here. And I was not playing around in the sense that if we were not going to hold 286 at least, I was going to cut back quickly, really quickly, okay? So what ended up happening was we just grinded higher, consolidated again, grinded higher, consolidated again, and then finally grinded higher and broke the highs. And that was the rest of the day for me. So that was the trade pretty much. So I set a limit order to cover half the position at a price, and it filled at 11.22. And then, so basically I sold the two spreads for $36 a spread. So like that's what I collected in my account. And then I covered the first spread for $17, and then I covered the last one for $11. Okay, so being pretty conservative with my limit order fills. I'm not trying to be greedy on these trades, guys. Look, the spread went from $36 to like $11. Like that's like 60% of the value of the thing. So look, I'm just gonna cover and take my profits and run. Okay, so my other trade here was on Nvidia. So basically I was paper trading this for fun on TradingView, and I had one big winning trade on the break above 250. So I said, you know what, I'm going to keep watching this because it was showing strong correlation to the market. I was again looking for the right options to fill on Nvidia, and if you look at it, Nvidia options chain here, you can see I was looking at the same day expiry, because all the other ones were pretty much, the spreads were just way too wide. And like I told you on Monday, wide spreads just simply do not work, okay? So I was looking for an option with approximately a 10 delta that I can afford with my small account, and that's pretty much it. So the options ended up being the 265 calls that I traded. So at the time, these 265 calls had a 10 delta with approximately a 2 gamma, or a 1 or 2 gamma. Now they have a 44 delta. That's crazy, eh? So you can see there, if we zoom in, I was picking them up around the break of 255. That was it. So I saw this kind of consolidation forming. I'm not really zoomed into the chart here, but that was pretty much it. And this was at the same time SPY and the Qs were trying to test their highs, and we're seeing some general bullish flow. So I picked up two of these contracts at around 80 cents here when we started to see a bit of popping above this area, and I was basically risking under 252. I was risking under these lows right here. So that was generally my trade. So I was risking approximately $20 to $25 on this trade max. All right, and as you can see, once Nvidia broke above 255, I started to look at what the market makers were quoting, and these things were flying and I sold the first one just above $1, and then I sold the second one at $1.60 or something, or $1.55. I can't remember. Let's see here, $1.66. That was the fill. So you can see nice profits on that trade. And yeah, in hindsight, obviously there was another opportunity after that, after this pullback. If you were watching this buy, there was a second opportunity there to take a trade based on this 5-minute high or low here. And as you can see now, all those calls just flew to the moon. They went up to $8. So in hindsight, obviously I should have held them, but the opportunity was there. And if you look at my trade, I sold right near the high of the move. So for a short-term trade, that's kind of where we want to be generally, okay? So the next trade would have been right around here, around 11:10, not 11:10, but around 11:15, when we started to see confirmation that our high or low was in, and that the odds are increasing that we were going to move higher from there. So that was another trade there. You could have taken one right here, got back in around 80 cents, $1, and then rode it up to $2, took some more off, put your stop up to break even or something, and then rode out the rest. And it was, look at this. This is not regular, man. This is why I trade options, guys. This is not regular, from $4 to $8. Like, look, how is it possible that I was risking $20 on my initial entry and I locked in $100? That's a 5-to-1, approximately a 5-to-1 risk to reward. All right. So guys, don't listen to any of these guys on YouTube that say day traders are just good for losing money. Look, do whatever you think works for you, and that's it. So those are my 2 trades for today, guys. I'm calling it a day. So don't hold too many bullish positions over the weekend, and manage your risk. Keep your risk absolutely managed on every trade. And look, honestly, right now the way I feel in my trading is I feel totally at ease, in a sense where, yes, I had a green day, but I'm not extravagantly happy or anything. You know, I feel totally regular because I feel like I've traded long enough and learned how to take losses enough that I know what it feels like to take losses, so that when I win, I shouldn't feel extravagant. So I think this is generally the mind space that we're aiming for to be in as traders. Okay, so I want to feel neutral, and I want to just develop that consistency and keeping that risk managed. And look, if I keep trading like this with these 5-to-1 winners, or even a 3-to-1 winner, look, I took the trade off when it was spiking like that at the top of the move. When I saw the move was looking to be extended, I was out of the trade. That's it. So guys, keep your risk managed, and all the best to you. Cheers. Bye.